is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to a special edition, a special show of Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Paris for President Macron's summit on a new global financing pact. And the aim, of course, is to try and change the way that multilateral institutions work to better support poorer nations and address threats like climate change and pandemics. Now, over the next hour, we'll hear from some of the leaders who are attending the summit. Here's what else is coming up on today's program. Of course, it's BOE Day. Happy Thursday. It weighs a jumbo hike after UK inflation comes in hotter than expected for a fourth month. Fed Chair Jay Powell signals rates are heading higher, but at a more moderate pace, telling U.S. lawmakers 2 more hikes this year is a pretty good bet. And we talk banking with the Deutsche Bank chief executive. He tells our Guy Johnson he expects trading results to improve in the second half as clients navigate a complex and challenging economy.
In Q3 and Q4, there is momentum in the business on the fixed side, but for us as a strategy of Deutsche Bank, it is important that we further balance out the investment bank overall.
Now, let's check on the markets. The focus firmly on what we heard from Jay Powell yesterday. And of course, ahead of the Bank of England, will we see more rate rises? Stocks slumping, U.S. equity futures also down. Again, quite a lot of central bank decisions. UK, Norway just coming out now, seeing the key rate at 3.88 in the third quarter of 2023. And then we also had earlier on Switzerland and some of the other things that we were watching out for today. Now, banks, real estate, miners, actually the biggest losers in today's trading session. Investors really rethinking some of the bullish spirits unleashed by last week's Fed rate pause after Powell yesterday underscored the need to tame inflation during his semi-annual report to Congress. Now, a big day, as we were saying, for central banks. That's after Jay Powell made those comments yesterday. Let's bring our markets reporter, Valerie Teitel. Valerie, last week there was kind of like a sigh of relief saying maybe central banks are pausing. Today, not so.
Today, not so much. We just got the decision from the Deutsche Bank, and it is a jumbo 50 basis point rate rise from them. Not only did they beat expectations on the size of their hike, but they are upgrading their guidance, saying rates will most likely be raised further in August. They also raised their expectations of the peak rate to 4.2%. Their last projection was 3.6, so over 50 basis points increase when it comes to their guidance for the peak rate. We're just watching the FX markets here. Euro NOK, you're seeing the Norwegian krona strengthening over 1% versus the euro. Now, this goes back to the decision from Switzerland just 30 minutes ago. They did not choose to go for a 50 basis point rate rise, but kept on to 25 basis points. That is the smallest hike from Switzerland this year. But they also said, very much like the Deutsche Bank, that they can't rule out additional rate rises when they meet again in September.
Of course, the big one, thank you so much, Valerie Teitel, is the BOE. As we heard, the rate hike is all but certain when the Bank of England meets today. In fact, there's been some repricing since we had that inflation figure yesterday. A major, of course, headache for the central bank, getting that inflation higher than expected yesterday, adding to pressure on the country's already squeezed household. So for a full rundown and actually what to expect on decision day, let's bring in Lizzie Burden, our UK correspondent. Lizzie, it's a headache. If you're at the Bank of England today, if you're an MPC member, I mean, what do you vote for? What are the chances of a half a point BOE hike today?
Well, Francine, markets are pricing a 40% chance of a half-point jumbo hike, but economists reckon it'll be 25 basis points. The reason for this decision split is because, of course, we had that fourth upside inflation surprise yesterday. So, as you say, it's a difficult moment for the Bank of England, but economists reckon the 50 is going to come in August. By then, you'll have a press conference, you'll have the forecasts. That should make it more easy to communicate why they're going back to acting forcefully. Also, by then, Silvana Tenreiro, big dove on the committee, will have been replaced by Megan Green, and she's been making hawkish noises recently. So as for today, some economists reckon you're going to get a three-way vote split between the doves like Tenreiro and Swati Dhingra emphasising that the previous 12 hikes still have to filter through to the economy, going for a hold. on the other hawkish end, so Catherine Mann, Jonathan Haskell going for 50, and the rest in the middle going for 25. But really, the question today is also about the future path for rates ahead. Markets pricing a peak rate of 6% by December. Some traders seeing 6.25%. Bloomberg Economics says that 6% would trigger a recession in the UK. Will the Bank of England Governor Andrew Bailey push back against market expectations? It often seems that the bank thinks it's above doing that. But it made an exception in November. Will it do it again? Will the markets take the message? If not, looks like credibility could be in the spotlight again.
Yeah, and of course, Lizzie, look, if you're sitting in Westminster, if you're an MP, you're worried that if mortgage rates go high, you're going to lose your seat.
Exactly right. And we're not far off a general election. It's very much on the horizon. There's pressure for the government to step in because the precedent's been set. It was very interventionistic in the pandemic, for example, with furlough. And so the expectation is there that they will do something again. There are worries on the Tory backbenches that, as you say, they'll be punished in the polls if they don't step in. And there's been a suggestion from former Shadow Chancellor John McDonnell that there should be a windfall tax on banks to pay for this extra mortgage support. Well, the answer from the Chancellor, Jeremy Hunt, so far has been that he's going to do nothing that will counter the Bank of England's inflation-fighting mission. We'll see what he agrees when he meets the banks on Friday in terms of other measures to ease the pain.
Lizzie, thanks so much. Lizzie Burden, our UK correspondent. Now, coming up, we'll have plenty more, of course, on the UK, on the Bank of England. We have a great chart looking at bonds worldwide. Plus, the Ukraine Recovery Conference continues, and the EU has already pledged some €50 billion aid package. We'll be speaking exclusively with the Executive Vice President of Economy and Trade for the European Commission. Don't miss that exclusive conversation. That's next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance early edition. I'm Francine Lacqua here in Paris for the Macron Summit. Now, the Ukraine Recovery Conference also continues in London, with, of course, allies from the US, the UK, and the EU pledging long-term support for the war-torn country. Well, let's go straight to our Bloomberg, Danny Berger, who is in London with one of the most important voices inside the Commission. Danny, over to you.
That's right, Francine. Thank you so much. And yes, the EU, they've already proposed a €50 billion aid package to support Ukraine as the country embarks on a critical counteroffensive. And as you say, I'm here with one of the most important voices on this. It's Valdis Dombrovskis, Executive Vice President of Economy and Trade for the European Commission, who joins us today for an exclusive conversation. Mr. Dombrovskis, thank you so much for joining.
Good morning.
So on this proposal, what's the reception been so far from member states?
Indeed. So European Commission put forward a proposal of $50 billion support package for Ukraine, consisting of both grants and loans, and it covers a period of 2024 to 2027. Mm-hmm. It must, of course, we'll have to discuss the specific package, but broadly speaking, there is support for Ukraine. EU member states have pledged on a number of occasions their willingness to support Ukraine for as long as it's necessary, and making sure that Ukraine is able to defend itself and win this war against Russian aggression.
So you have broad support for this then. Do you expect support for this package then in its current form from the member states? Well,
yes, indeed, we would expect the support for the package. Of course, there's going to be discussion with member states. It may bring some adjustments, but generally speaking, it's clear that this year we were focusing on how to ensure financing need for Ukraine for this year, and this is done. So financing need for this year is covered. Actually, today, EU is paying another €1.5 billion to Ukraine as part of our macro-financial assistance program. And now we are looking more at the medium-term focus. That's where this $50 billion package comes in, where on one hand we still need to finance, to cover the financing need of Ukraine, but we also need to start working on reconstruction, combining investments with reforms which are needed also for Ukraine's EU integration.
Right. And so the figure of this package of 50 billion, spread out over the 4 years, it is less than has been contributed to Ukraine over the past year. So annually, the figure does look a little bit lower. How did you get to that specifically? Do you think it will need to ultimately be higher?
First of all, of course, we expect now also other donors coming with more medium-term plan. Actually, EU is a first to come with a sizable medium-term package for Ukraine. On one hand, we expect support also from other donors. On the other hand, we also need to work on the absorption capacity and capacity to use this money in Ukraine, how quickly it can be deployed, because on one hand, reconstruction need is huge, but on the other hand, there are obviously capacity limits on how much simultaneously can be reconstructed.
And on the topic of using the money, what steps need to be taken to make sure that it's not misused, to tackle any concerns about corruption?
First of all, Ukraine would need to prepare medium-term Ukraine reconstruction plan. After approval of this plan, the money would be available for Ukraine as it advances with implementation of the plan. And clearly, we are also proposing a strong audit and control system to make sure that this money indeed is put for a good use.
And it's interesting because part of what you've done here is you really do strengthen the financial links between member states of the EU and Ukraine. Will this help Ukraine's process in joining the EU?
Well, certainly, as I was saying, we see also this financial package linked with Ukraine's accession path. So Ukraine would need to clearly do lots of investments, but also implement reforms which are linked to the EU accession.
And how do you see that process going? Where do we stand on it currently?
Well, currently, just now, European Commission provided so-called oral update on how Ukraine is proceeding with implementation of conditions which were set when Ukraine was granted EU candidate country status. All in all, progress is good, and there is substantial effort which Ukrainian government is putting into this despite very difficult war situation. But then we are going to have a report, enlargement reports for all EU candidate countries in October. And I would say that's the moment when we really discuss the next steps for Ukraine's EU integration.
So it's certainly been a busy week. The EU also proposed a new economic security strategy earlier this week, too, on things like controlling outbound investment and exports. Do you expect pushback from member states?
First of all, as regards export controls, we already have export controls regulation in place concerning notably dual-use items, and this outbound investment is, in a sense, linked with this. So if there are export controls to make sure that sensitive goods, dual-use goods, do not end up in hands of malign actors, we also need to look whether the same is not achieved then through investing in those countries and transferring technology, know-how, and so on. So it's closely linked. But clearly, this will require further discussions with member states. So that's why we propose that we are setting up an expert group together with member states to work on these issues.
So does that mean there has been pushback then?
I think we require more discussion, because this is a new area, as I was saying, in terms of export controls. It's also relatively new EU-level regulation, which we are currently applying. On outbound investment, currently we do not have any mechanism in place. So this requires discussions, and we are going to have those discussions with member states, with different stakeholders, including business community, with a view of then coming with an initiative by the end of the year.
What do you say to Chinese officials then who say, look, if they're speaking specifically about Germany when they said this, but in terms of de-risking and trying to move away from China, it should be left up to businesses, not government? What do you say to that?
First of all, when we are proposing any initiative or any legislation, we do it in a country agnostic way. So it's not specifically referring to one or another country. And second, what we are going to put forward also is with respect of international rules-based framework, for example, our WTO obligations. But at the same time, it's clear that in the EU, we should continue to build on our strengths of being open economy, of being a trading superpower. But at the same time, there are certain economic security concerns which we need to address in a more conflictual global geopolitical environment.
Well, we've seen certain measures like that from the U.S. invoke the ire of China. Are you concerned that this might end up doing the same?
As I was mentioning, that when we are going to prepare proposals, we are going to do this in a way that respects international rules.
Okay. Valdis, thank you so much for joining today, stopping by during the Ukrainian Reconstruction Conference. That is Valdis Dombrovskis, Executive Vice President of Economy and Trade for the European Commission, in what is a very crucial time for the European Union. And we're also going to be speaking to the Ukrainian Prime Minister from the Ukraine Recovery Conference in London. That will be at 1:30 p.m. local time. But first, coming up on the show, Christian Savings says Deutsche Bank's business strategy is paying off. We're going to have that exclusive interview next. This is Bloomberg.
We have a very strong corporate bank, a very nice developing private bank, and therefore we can confirm our 28 to 29 billion of revenues for this year. We see the momentum. We see a Q2, to be honest, Q2 2023 from a revenue point of view, which is higher than Q2 2022. So overall, I would say this bank is faring well. The strategy is paying off. With regard to the investment bank, we always said that we had a record year. We had an extraordinary strong year in the FIC business in 2022. I still think that actually in Q1 and Q2 we have done well, but the overall market is a bit weaker than in the record year of 2022. But I do believe with some uncertainties, for instance, the debt ceiling issue going away in the US, then with the still complex situation which is in front of us, I do believe that in Q3 and Q4 there is momentum in the business on the FIC side. But for us as a strategy of Deutsche Bank, it is important that we further balance out the investment bank overall. We have a very strong FIC business. We have a very strong DCM business. What we really wanted to achieve is that also the O&A business is further strengthened. And hence, we've put a lot of investments into that.
So just to wrap this part of the conversation up, it's going to be an operating environment for the FIC business that is likely to be less good than last year. Q2 may or may not be a blip. You still see uncertainty in the second half of the year, which could provide opportunity. So on balance, the numbers are likely to be slightly better than the 15 to 20% that James guided to.
That's what I would say for the coming months and weeks. Again, Q2 was also a particular quarter, given the situation also we had in the US. We can already see also now in June, on the most recent days, that there is momentum in the business. So I'm overall actually quite comfortable also with the FIC business. And again, Q2 was a particular quarter. I would say that the FIC business in Q3 and Q4, I think there was a slight recovery.
Well, that was the Deutsche Bank Chief Executive Officer, Christian Savings, speaking exclusively to our very own Guy Johnson. Now, we've had a lot of central bank news. Of course, the big one coming up at 12 p.m. UK time. That's the Bank of England. For the moment, let's look at Norwegian krona. I don't know whether we have that on screen for you, but certainly the krona was surging against the euro after the Norges Bank, the Norwegian central bank, actually raised its benchmark rate by 50 basis points and flagged another increase in August. Now, the Monetary Policy and Financial Stability Committee for Norway decided to raise the policy rate by 50%, well, 0.5 percentage points. They're basically saying that the current assessment of the outlook and balance of risks implies that the policy rate will most likely raise further in August. So we are seeing, after also we heard from Jay Powell yesterday, that the fight of inflation needs to continue. We are seeing more aggressive moves from central banks. We'll see what we hear from the Bank of England. That's at 12 p.m. UK time. Now, Bitcoin has jumped for more than 20% back above the 30,000 level since BlackRock's surprise filing for a Bitcoin ETF last week. The move has sparked a flurry of similar applications from rival issuers. And of course, we also look at what's happening with the Titanic and search efforts there. Not the Titanic, but of course the submarine, the submergible that was going to see the wreckage of the Titanic. Coming up, we'll be speaking with Pascal Canfin, the EU Parliament Chair for the Environment, Public Health and Food Safety Committee. And then a little bit later on, an exclusive conversation with the French Finance Minister, Bruno Le Maire. He joins us here at the summit for a new financial pact. Hello from Paris. Now, the BOE weighs a jumbo hike after UK inflation comes in hotter than expected for a fourth month. The Fed Chair Jay Powell signals rates are heading higher, but at a more moderate pace, tell US lawmakers 2 more hikes this year is a pretty good bet. And then the Deutsche Bank chief executive tells us exclusively that he expects trading results to improve in the second half as clients navigate a complex and challenging economy. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Paris. Now, you just saw and heard, maybe not saw, but heard a huge clap as we saw President Macron about an hour ago get on stage, and then he's followed by a lot of, pledges from a lot of climate leaders and heads of state. So the concern is that you're not going to get anything concrete here, so that there's an agreement of talking more. Climate change solutions, of course, the focus here at the Summit for a New Global Financing Pact. French President Emmanuel Macron attempting to build support, basically, for overhauling the global lending architecture. So I'm very pleased to be joined by Pascal Canfin. He's the chair of the Environment, Public Health and Food Safety Committee at the EU Parliament. So, Mr. Canfin, thank you so much for joining us. There's a lot going on. So people have to understand that there's like 30 heads of state in a rather small, confined space. And there's a lot of excitement at who's here and who's not here. What are you hoping to achieve in the summit?
Well, first, we need to rebuild trust. I mean, the key element of solidarity is trust. I mean, if we don't trust each other, the system will be broken for sure. So one example is the money we committed to share at Copenhagen. It was in 2009, and we failed to do it so far. The good news is that it was announced a few minutes ago. We are now very likely, de facto we are now, for 2023 at 100 billion on climate. It's by far not enough, but symbolically, politically, it was needed to get there.
I mean, how will you measure success of the summit? It's like, you walk around, and again, there's very few media that have been invited here, so we're lucky to be part of this. You see the Saudi Crown Prince. We spoke to the Saudi economy minister, who's just walking along the corridor. You have the president of Brazil. You have so many people that can make a difference. Yeah. I mean, is it signing, or is it again talking about trying to get somewhere?
Is it redesigning? I mean, we know that in the context of China and the US being on more and more conflictual line, on having more and more climate impact, and the failure of the COPs to deliver on enough climate action. All of that is destroying trust. So we need to use both formal and informal fora like this one to recreate the connections and to redesign the system to be able to be at scale both for climate and for development. And that's also what President Macron said at the very beginning. If we start opposing climate action on one side and fight against poverty and for development on the other, we will collectively for sure fail. So that's why we need to design new tools like guarantees, way to have more injection of private capital and so on. That's the core of the agenda.
But some of the old tools are actually not working. If you look at the EU Green deal, right, it's faced so much pushback from constituencies, from countries, for example, on everything from renewables to nature restoration. So how severe, first of all, are these challenges, and do you think they'll be overcome?
Yeah, so that's the problem when we turn into climate action into reality, that it starts having impact, and then you have opponents saying, well, what is going on? I do not want this. So we are changing the business models here in Europe. And it has impact, positive impact, but also negative impact for some businesses, and they are pushing back. They are pushing back, so that's why.
Do you worry about these challenges?
So I'm not worried, but I can tell you that every day we work very hard to counter this backlash that is coming from a sort of European Trumpism, which is new, and which is an alliance between part of the right-wing parties and part of the extreme right-wing parties on a line that is well known in the US. And that's coming to Europe now, and we are to make sure that we win this political, this cultural battle we are in, to continue proceeding on the Green Deal and climate action.
What would you do now to also make sure that if you look at green tech, clean tech, it doesn't go to China, it doesn't go to the US because of the Inflation Reduction Act, it comes and stays in Europe?
So the good news is that last year will remain as the year when the competition for green tech and clean tech really started at scale for real, China, Japan, Korea, EU, US. In the US, you have IRA. In China, you have domestic policies. And in the EU, you have the Green Deal and everything what we have been doing. And this is good news because the only way to win the climate battle is to have productivity gains, to have decreasing cost of production, and being producing at scale. So that's good news. Then it's up to us to be part of the winners and not of the losers. But then we have domestic EU policies, public support, we change the framework for state aid regime, for instance.
No one wants to be a loser, you just have to put the policies in place that attract the money.
When you look at the US IRA, when you look at the concrete figures and the concrete sectors that are concerned, the vast majority is for the US domestic market. Energy production, US domestic market, CCUS, US domestic market, EVs, of course, which is good. It's good. I mean, it's good that we have including European companies producing in the US for the domestic US market. But it will not prevent them to produce domestic EU for the EU market.
But what about the development?
So I'm not that worried about that.
I am, because if you look at the cost, for example, of producing hydrogen, clean, green hydrogen in the US is going to go so much cheaper. Why would you not bring that technology to the US instead of developing it in Europe?
Hydrogen is one of the very few counter examples of what I said. But the vast majority of IRA money is for the domestic US market. And then part of it, a small part, is for exports, or also domestic US market for green hydrogen, but also for exports. But then if, for us, it means that we could get part of our green hydrogen cheaper because there is a good, sound US policy making it cheaper, what's the problem at the end? What's the problem? Of course, if we entirely rely on this, that will make a problem for us in terms of dependency. But if it is part of it, what's the problem?
How much money do you think private and public partnerships can put together? I mean, at the end of the day, it's all about the finance, right? And we've taken a step forward and sometimes a step back. How much money does Europe need?
It's very complicated to say, to be honest. Why? Because at the EU, you know that by heart, there are member states plus the EU level. So you cannot compare, and it's a mistake that shouldn't be done. You cannot compare the US federal money with the budget in Washington and DC and the EU Brussels-based budget, because as you know, the total budget of the EU is 1% of the total EU GDP, when the total federal budget in DC is around 20% of the US GDP. So you cannot compare both. But if you took everything on board, plus the regulations that force, that drive, incentivize private investments, I don't think that we are lagging behind. And if I take the French case, I met a couple of days the ministers in charge of this, and he told me there is a single project, not a single project, that was about to be invested in France that is not invested anymore because of IRA. Because actually what the companies are doing is precisely to locate investments in the US, mainly for the US market and for the EU market domestically in the EU.
Are governments less likely to put money behind this because there's a huge cost of living crisis, inflation is a real problem, and so central bank interest rates are also changing?
When we talk about inflation, what kind of inflation are we mainly talking about? We are talking about fossil inflation, inflation coming from a fossil crisis energy. So it came from Russia, and then it spread all over the value chain, I would say. But it is the main driver behind what we see as inflation last year is the fossil fuel crisis from, obviously, the invasion of Ukraine by Russia. Then there is another risk, which is what we call greenflation, meaning that the cost related to transition. But it is more medium term, because what we are facing now, it's not at all greenflation, it's fossil inflation. So let's just get back to reality and then fighting this fossil inflation. And the best way to fight this fossil inflation is precisely to be less dependent on fossil fuel.
Pascal Canfin, thank you so much for joining us today. He is, of course, the chairman of the Environment, Public Health and Food Safety Committee at the EU Parliament. There, a robust conversation also about the Inflation Reduction Act. Now, coming up ahead, we'll be speaking to Angola's Finance Minister, Vera de Sousa, live from Paris about the economic outlook for one of Africa's biggest oil exporters. And then a little bit later on, we also speak to the French Finance Minister, Bruno Le Maire. Stay with us, and this is Bloomberg.
There is a need to increase the investment clean energy in the emerging world, in Asia, Latin America, and Africa. And it is the reason we came here with a plan to President Macron and the other leaders, how we can accelerate the clean energy investment in developing countries.
Well, that was Fatih Birol, Executive Director of the IAA, of the investment needs for clean energy in emerging markets. I was caught off guard there because I was actually checking the price of oil and seeing some of the dynamics. We're here live in Paris at Macron's summit for refinancing. I am delighted also to be joined by Vera de Sousa, the Finance Minister of Angola. Minister, thank you for joining us. There's a lot to talk about. It's oil subsidies. Of course, this is a huge summit that would make an impact on Angola. Are you seeing the right signs from here about transitioning and getting enough support from some of the countries that need to transfer funds?
Yes, for sure. I think the political will is there. The commitment is there. Now what we need to see is the actions, the pragmatic actions for us to address.
Will we get action? Are you confident that we'll get money, we'll get things signed, or is it just talk?
I'm very positive. I'm a positive person, and I will put a lot of faith on that and keep working and putting pressure on the right institutions, on the right people. President Macron is also in the same mood of putting pressure, and we expect, based on that, we will see some actions coming.
Who do you think is leading? So we also have the Prime Minister of China. This was a huge deal, right, for Emmanuel Macron to try and get him here. Can China play a defining role and a big difference?
I think we need to look at it as like a whole effort. It's not possible to rely only at 1, 2, or 3 partners. We need to come together. And only coming together is possible to address a challenge such big as climate change, the distress, needs on liquidity, and also development. All this together, it's a hard task. And so we need to move together to address it.
Minister, when you look at some of the measures put in place to decrease poverty in your country, what will work the best, and what does that mean for future growth in terms of GDP this year and next?
We are acting in the short term and with some structural movements. Short term, we are putting in place some mitigation measures with World Bank support, cash transfer program. We are moving an employment fund. We are establishing one that will start the basis to address the capacity building and to build on the entrepreneurship of our youth, and at the same time reducing some subsidies that need to be reduced, gaining fiscal space, and based on that do the investment that is needed on infrastructures, on health, education, and improve the business environment for the local production to come, industry, agriculture, fisheries, tourism, and with that jobs creation, fiscal revenues, growth.
So, Minister, on the fuel subsidies that you've had to pull back, what kind of impact will that have on inflation?
Well, we are seeing the first signs impact, but we expect after that with monetary policy at one side, central bank, and also some measures to see what is happening at the distribution and commerce, some speculation as well. Moving on that two directions, we will see after some time we're coming back to the downward trend tendency.
Do you worry about social unrest because of these fuel subsidies being taken away?
We are working hard on the mitigation measures. We increased the monthly amount of money for the poor family, especially on the rural areas. We commit more money to our program, cash transfer program. We designed a prepaid card to address the costs of transport, especially for people that use taxis and motor taxis. We have big vans and also motors that address the lack of buses and metro and those kind of solutions. So we are getting a prepaid for these transports just to make sure that we protect the final consumers. And we are also established that fund, the employment fund, and we hope with that we will somehow mitigate the impact of that movement that we started.
And so, Minister, in terms of growth prospects, have you revised upwards or downwards some of your estimates for this year and next?
We are following closely the oil sector. About the non-oil sector, we're still very positive, and we think that it will perform as we were expecting. But the oil sector, we are seeing some downward trajectory on the oil production, and we will need to keep moving, to keep looking to see how the impact will be at overall GDP performance. We still confident on the 3% growth this year, but let's see in the next months how the oil production will perform, and to prepare scenarios based on the fact if we see the reflection of that downwards on oil production in our growth.
Minister, in terms of financing, do you need to issue Euro bonds? Is it something that you'd be interested in doing?
For now, no. We will continue monitoring the markets, the conditions, the risk perception, and we will step in only when we understand that doing it, we will not put ourselves in a worse position in terms of debt servicing.
So you think at the moment it's hard? Yes. There's just not enough demand, or what's going on?
The interest rate that the market will ask us to pay is too high for us to address. So we will continue to follow, do our internal home, some housekeeping, and just when we understand that the markets are fine enough for us, we will step in.
Minister, thanks so much, as always, for joining us. That was Vera de Sousa, the Angolan finance minister. Now, coming up, the Fed chair, Jay Powell, of course, was talking yesterday. He signaled rates are heading higher, but at a more moderate pace. So he told U.S. lawmakers 2 more hikes this year is a pretty good bet. We'll hear about the markets and what they're pricing in next. This is Bloomberg. Well, that was the Federal, actually we'll hear from the Federal Reserve Chair, Jay Powell, in just a second, telling Congress that Fed policymakers expect interest rates and they will need to move higher to contain price pressure. So let's listen. I think we have Jay Powell, otherwise we know exactly what he said. It's basically he wants to be more hawkish, so he wants to hike more, but maybe not so aggressively. A couple of other things that we need to watch out for because it's a big, big central bank day. So first, let's hear from Jay Powell, and then I'll have a full roundup of what else we heard.
We never used the word pause, and I wouldn't use it here today. What we did was we agreed to maintain the rate at that meeting. Almost every single of the 16 of the 18 participants on the FOMC wrote down that they do believe it'll be appropriate to raise rates, and a big majority believes raise rates twice this year. And I think that's a pretty good guess of what will happen if the economy performs about as expected.
Well, how to put it, basically central banks across the world have changed the animal spirits of markets. They're really wielding more rate increases and talking about really having to fight inflation maybe for longer. Then the other one that really surprised today is Norway's central bank lifting its key deposit rate by 50 basis points to 3.75%. We also had the S&B, a smaller increase, but saying they will keep on fighting, of course, inflation. Then the big one, the BOE. What's priced in? I think there was a huge repricing, 40% of markets now expecting a 50 basis point hike. This is a vote by committee, so we'll see how they vote at 12 p.m. UK time, and then we'll see forward bets on how that changes the markets. I think a lot of market participants have interest rates in the UK at 6% by year end. Now let's return here to Paris, President Macron's summit on global finance, and bring in our climate reporter, Akshat Rathi, who understands the nuts and bolts of what could be announced. Akshat, I don't know whether this will, good morning first of all, I don't know whether this will actually yield anything concrete, or whether this is a feel-good summit for Emmanuel Macron and the people here.
Well, to understand it, it's really complex, and I do not fully understand it. But what we do know is that without making many of the changes that are being talked about today, there is going to be no way to try to meet climate goals. And all the leaders who've come here appreciate that. You know, we had a climate activist sit in front of Mohammed bin Salman from Saudi Arabia. She's telling him, stop digging up oil. It's a complicated situation, but these conversations are happening. And what we will get at the end will be a statement which will say, we support A, B, C, D, and all the names who arrived have approved
But support doesn't mean that we have a Bretton Woods agreement, or does it?
No, because this is not the forum for it. So the place where the change will happen will be at the annual meetings where the shareholders will vote. But getting them agreed upon what those changes will be requires time, and this summit is mainly to get that consensus going.
Yeah, so we have a consensus. I mean, it's still quite impressive. You're saying, you know, there's a Saudi crown prince, there's President Lula, there's a president of Nigeria, so really heavy hitters, and the premier of China. I mean, we haven't seen Janet Yellen together with a high-ranking Chinese official to talk about these issues in a safe room for a long time. Akshat, thanks so much, as always, Akshat Rathi. Now, we'll have plenty more, of course, from the summit throughout the day. A little bit later on, in about 40 minutes or so, we'll also be speaking to the French finance minister, Bruno Le Maire. He's one of the hosts, of course, of this event, and we'll track any progress when it comes to tackling finance and climate change. This is Bloomberg.
This is Bloomberg Surveillance Early Edition with Danny Berger and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Investors keep an eye on a host of central bank decisions. The Swiss National Bank and Deutsche Bank raise rates as markets anticipate the Bank of England to follow suit with a 13th hike. It's day 2 on Capitol Hill. Chair Powell doubles down on the Fed's expectation for additional hikes in the first day of the hearing. Traders bet the bank will rise one more time in July. And a glimmer of hope comes from Deutsche. CEO Christian Saving says he expects trading results to improve in the second half. More from Bloomberg's exclusive interview coming up. Good morning and welcome to Bloomberg Surveillance. This is the early edition. I'm Danny Berger in London. Kriti Gupta is in New York. And Kriti, we did it. We got it. We got a jumbo surprise from Norway. Now we just got to wait and see whether we're going to get a surprise from the BOE.
Yeah, and I would argue even a surprise in the opposite direction from the Swiss National Bank as well. You're seeing a lot of different cross currents in Europe right now, which I think is interesting for the U.S. session because ahead of the BOE, we're really kind of waiting for that heavy hitter. The market action is kind of mixed, and here's what I mean by that. We'll start with futures here, which are kind of taking a very cautious approach. 4,400 on those contracts, down about 0.2%. I'm going to call it some cautious optimism, or Danny, I think yesterday you called it cautious pessimism, perhaps. But the 10-year yield is where I'm really interested in because that's really where you're going to see the ripple effects of what the BOE does, and arguably the ripple effects of what the S&B and Norges Bank did as well. The 10-year yield at 3.76, we'll call it, higher by 4 basis points already. So you're already seeing some of that volatility get sewn into the markets, and it's only 5 a.m. in New York. So what happens when we get closer and closer to that Bank of England decision? As yields go higher, the dollar follows, well, in theory at least. And right now, again, those cross currents in the FX space are pulling the dollar in very different directions. Overnight, we're getting some data out of China, out of South Korea, out of Japan as well, basically saying that, look, the Chinese recovery isn't as strong as expected. That's going to be weighing on those currencies that you were going to see, for example, the Korean won, the Japanese yen, for example. That's going to push the dollar higher. Here's what's going to push it lower. A lot of the central bank decisions that we got out of Europe right now, the Bank of England expectation, and of course, Norges Bank as well, going to pull the dollar in the other direction, which is why you're seeing net-net, the Bloomberg Dollar Index kind of flat right now. So really keep an eye on that because that's going to change based on what we see on the other side of the Atlantic. Bitcoin is where it gets interesting. Now, Danny, I don't usually check in on Bitcoin as kind of a macro asset, but here we are crossing $30,000 on some news that BlackRock is now going to be talking about kind of filing it and incorporating it, into their ETFs. Why this is significant is on a technical basis because now you're crossing that 30,000 level, which Bitcoin hasn't tested in quite a while. It's also crossed its 200-day moving average if you want to apply technicals to Bitcoin at the end of the day. But to see that optimism on a sea of red, that's pretty interesting, Danny.
The sea of red continues in Europe, Credit. I got to say, I'm so pumped about this Norges Bank decision. I'm so pumped we're talking about jumbo rate hikes again. Honestly, just because I want to say the word jumbo. It's very fun. Anyway, it is a sell-off that's intensifying in Europe. It's looking like something real versus just consolidation, which is what it felt like to start the week. We're seeing declines of more than 1% for a lot of these regions, for the CAC 40, for the FTSE MIB, for the IBEX. But I want to show you currencies because, Credit, I mean, you pointed this out. That's really where the excitement is today. Now, if you were trading the Swiss franc, I honestly do not envy you. It was really wild to watch the session because right leading up into the S&B decision, it started to gain. In fact, it strengthened the most versus the yen since the franc was floating, not pegged anymore. But then we got that decision that it was 25 basis points. It wasn't a hawkish surprise from the SNB. So now this cross, which again had hit a record high since it was no longer pegged, is now back down. The yen is gaining against the Swiss franc. Now, elsewhere in the world of currencies, again, it was the jumbo rate hike from Norway. Not only did they hike by 50 basis points, but their peak rate is significantly higher. Their forecast was for 3.6%. Now it is 4.2%. So the core is hot in Norway. They have a tight labor market, so they are hiking. And that's the same exact dynamic for the Bank of England. Right now, we're not doing much on sterling, really just waiting for that decision, Credit.
I want to stick with that story, Danny, because of course it's going to have ripple effects around the world. A rate hike is all but certain when the Bank of England meets today. After the May inflation print showed core CPI, as you just mentioned, still on the rise. For more, we're joined by Jamie Rush, our chief European economist. Jamie, talk to us about the odds of the BOE going 50 today.
I actually think they're going to pass on that. I think 25 basis points would be sufficient. Let me tell you why. So if you think about how loans are priced in the economy, 2-year, 5-year loans, they're not based on bank rate, they're based on swap rates, and those have really climbed. So monetary policy is already acting as a massive drag on the UK economy. The repricing over the past couple of months of rate expectations is going to squeeze further. The bank doesn't want to add 50 basis points to that mix, so I think they will take a non-panicked approach, 25 basis points, and not push back on market pricing.
You know, it's interesting because when it comes to the SNB, we did see them downgrade their inflation forecast. I mean, I'm assuming that's because they hiked. But, I mean, why hike if they are seeing maybe a less pernicious environment?
Well, there's a couple of things. I mean, they've got to position themselves relative to the ECB and the Fed if they want to avoid any movement in the exchange rate. And for us, sat here in the UK where core inflation is 7%, we look at them, they've got core inflation of 1.9%, we think, hey, what's the problem? Well, they don't like core inflation of 1.9%, they want it lower. Yeah. So I think they're going to keep going with the ECB, probably September as well.
Well, Jamie, at the start of this segment, Danny pointed out just kind of the monster move we got from the Deutsche Bank, largely unexpected by the investor consensus. Talk to us a little bit about where that's coming from here. I don't think it's lost on me that the Bank of Canada, the RBA, and Deutsche Bank have all hiked to the upside. Is there a commodity narrative going on there?
I think the Deutsche Bank is in a specific position in that historically rates have always been higher than the ECB, and they were below. So I think they had a bit of catching up to do. So I think that helps explain it. They also have that tight labour market, high core inflation. So it's reasonable.
Well, a lot to digest there. Jamie Rush, all over it, our chief European economist over at Bloomberg Economics. We'll also be speaking, by the way, with the Swiss National Bank President Thomas Jordan later today. Stay tuned for that interview. In the meantime, stateside, we go to the Federal Reserve. Fed Chair Jay Powell testifying before the House Financial Committee, leaning on his hawkish message after a pause last week.
We never used the word pause, and I wouldn't use it here today. What we did was we agreed to maintain the rate at that meeting. Almost every single of the 16 of the 18 participants on the FOMC wrote down that they do believe it'll be appropriate to raise rates, and a big majority believes raise rates twice this year. And I think that's a pretty good guess of what will happen if the economy performs about as expected.
Joining us now is Bloomberg's Paul Dobson. Paul, talk to us about the biggest takeaways here from Chairman Powell's testimony. Has he said anything that perhaps other central banks around the world might kind of rip a page out of?
Yeah, well, you heard the guy, talking about 2 more hikes at least this year. Maybe not all guns blazing and done in one go. Maybe a slower pace, hike, pause. But he's still talking about doing more, and that's exactly what you've been talking about on the top of the show with all of the other central banks around the world moving in that same direction, starting with Australia and Canada, which surprised earlier in the month, and now we see Deutsche Bank going aggressive as well. Expectations high for what the rest of the central banking community is going to do. 1 or 2 setbacks around the world, maybe the market can survive, but if there's complete unanimity in the terms of these blows coming one after the other from the central banks, at some point you're going to think that that's going to check that momentum that we've seen in equity markets so far this year. Over on the rate side, you've seen the yield curve inversion getting ever more pronounced, back to 100 basis points between the rate on the US 2-year and the yield on the 10-year bond as well. It shows you people are pricing in more aggressive Fed short term, but the long-term impact is going to be, a need to slam on the brakes at some point as well.
But even before we had those decisions today, we still had markets selling off yesterday in reaction to Powell. And I guess, Paul, I just kind of have a head scratcher about that because, he didn't really say anything different than last week's FOMC presser, did he?
I don't think that he said anything different, but he emphasized and he stuck very much to the message and to his guns and to the communication. I think that, markets are a little bit like naughty school children at the moment, trying to see where they can push things, but keep getting reminded or scolded by the teachers at the central banks, that they need to pay attention to this because they're not going to check or they're not going to change their mind. If there is any more dovish voices from the Fed, it seems to be from the non-voters rather than the voting side of it at the moment. There is still very much that kind of, stance from policymakers that they want to get this done and they want to get inflation in check. And I think, Powell almost said explicitly, if that causes a slowdown in growth, so be it. That's the intention right now.
Paul, I've said this earlier, I'll say it again, and I stand by it, that the most interesting thing about the hearing yesterday was Powell saying that he is a Grateful Dead fan. He has confirmed the rumors. Paul, thank you so much. That's Bloomberg's Paul Dobson. Now, after warning about a 20% drop in quarterly trading revenue last week, Deutsche Bank CEO Christian Sewing told Bloomberg in an exclusive interview that recovery is in sight.
In Q3 and Q4, there is momentum in the business on the fixed side, but for us as a strategy of Deutsche Bank, it is important that we further balance out the investment bank overall.
Joining us now is Bloomberg's Guy Johnson, who conducted that exclusive interview. Guy, what were your big takeaways?
Well, I want to fold in what we've been talking to Christian Sewing today about and fold it into the conversation you've been having about rates. So James von Moltke a few days back says Q2 we think we're going to see a drop of between 15 to 20% in FIC revenue. What Kristen Seving today said is, I think for the rest of the year we're going to see a recovery. And the reason is that he doesn't see the macro uncertainty that we see in evidence this morning. You've been talking about the Deutsche Bank, we're going to get the Bank of England. He doesn't see that abating. And this macro instability is perfect for FIC trading. So basically he sees it continuing, and as a result of which he sees the FIC business bouncing back in the second half of the year. So this environment he doesn't see going away anytime soon. Get used to it. It's going to be with us for a while.
Well, guys, speaking of a really difficult environment, talk to us about the deal environment there. Does he have any more deals up his sleeve?
Okay, Critty, so he surprised everybody. He's very good at keeping secrets clear because he surprised everybody with the Numis transaction that Deutsche Bank did a couple of months ago, April, May. Nobody saw that one coming. Everybody thought that they were going to do a deal in in wealth management. They did a deal in advisory. The question is, what comes next? He kind of hinted that if he sees other good transactions out there, he will take them. He also hinted that he's looking to hire really good people right now. He's looking to provide balance throughout the entire business. He's trying to move it away from trading to focus on other areas, more stable areas, more capital light areas. And you get the impression that if there are other transactions that come up, he is willing to take that. But he's also very clear that he is in a position where he wants this bank to be profitable and he wants to continue to return money to shareholders. He wants that stability because that's the bedrock on which his plan is built. But yeah, maybe he has got a few other tricks up his sleeve. Maybe he has got a few more secrets to tell. He certainly gave a few hints about that today.
Guy, if anyone can get those secrets out, it's you.
I will try.
Guy, really fantastic interview. Bloomberg's Guy Johnson there, of course, speaking earlier exclusively to Deutsche Bank's CEO. Now, coming up, speaking of exclusive conversations, we're going to be interviewing the French Finance Minister, Bruno Le Maire, at the summit for a new financial pact in Paris. And we're going to push ahead to the BOE decision. We're going to be speaking with Sonali Punhani, head of UK economics at Credit Suisse. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Danny Berger in London. Look, the question today is all about central banks in Europe. You're starting to see, of course, a lot of anticipation for what the BOE is going to do, expected perhaps to hike for a 13th time and maybe even go as high as 50 if you are in that boat. What's interesting, though, is at the same time you get decisions out of the Swiss National Bank and Norges Bank, both surprising in different directions. The result is a mixed picture for the dollar, which is kind of net flat at the moment. But take a look at what's driving it. That strength in the Norwegian krona is actually weighing on the dollar the most. Pretty substantial when you compare it to, say, what the Swiss franc is doing off of the S&B, only hiking 25 basis points. Again, surprising, but perhaps to the dovish side, that's actually perhaps strengthening the dollar just a little bit. Joining us now is Bloomberg's Eddie Vanderwall to kind of break it all down. A lot of different cross currents here. Eddie, Kit Jukes over at SocGen put out a note this morning, and he asked the question, when do rate hikes ultimately weigh on currencies instead of going the other way around? I'll put that question to you. What do you think?
Yeah, absolutely. Look, I think Kit was alluding to the pound there, and there's a lot of expectation that the Bank of England will have to become aggressive. But we've got to look at the reasons, right? The reasons are that inflation remains hot here, and the fear is that topples the housing markets, which then brings the the UK into recession. And I think that's why, for the UK in particular, if we see those aggressive moves from the BOE, it may not be supportive of the pound.
Yeah, and I know there's some, current accounts dynamics in there too. But okay, so you have Norges Bank surprising with a hawkish decision. Inflation in the UK is obviously very hot too. To what degree is this a global trend of re-upping rate hikes, re-upping inflation, or is this very contained?
Look, I think this is what we are seeing here is the emergence of a new trend, which is central bank divergence, right? I think there are various economies around the world that are in very different stages, both of their rate hikes, but also just of their economic cycle, right? And I think the UK is at the one extreme there. We're struggling still with inflation, with slower growth, whereas other places like the US, growth is still doing well, and they don't need to hike as much anymore because inflation's starting to come down. And then on the other hand, you've got China, right, where they are actively boosting the economy because things are slowing down. I think post-COVID, we had all of the central banks in the same boat, and right now we're just starting to see that divergence.
So, Eddie, it feels like then at the end of the day, even though perhaps in the short term you have these kind of big moves being driven by those interest rate differentials, that is not going to be the long-term play when it comes to both the bond market and the FX market.
Yeah, I think you've got to look at each economy and you've got to figure out why it is that they're doing what they're doing. Are they doing this to support the economy? Are they doing it out of almost a sense of panic? In the UK, you know, it really feels like things are a little bit out of control. Inflation keeps running hot with every reading. And the Bank of England may just feel that they both have to surprise to the upside and give some hawkish guidance, but that at the same time may just topple the housing market. So yes, I think it's a very sticky situation in some places.
One risk asset that cares not one bit about any of this because it's got its own thing going on. You know where I'm going, Eddie. It's Bitcoin.
I do.
I mean, there was this BlackRock ETF last week that was filed. I mean, is it fair to say, okay, if BlackRock is filing an ETF for Bitcoin, they're feeling confident that something's going to happen?
Look, I think BlackRock knows a good bandwagon when it sees one, right? I think what we're seeing here is Bitcoin had a tough 2022 and is probably coming back a little bit on the expectations of some sort of, of a halving of supply again next year. And every time that we have seen those halvings of supply, which is something that's built into the Bitcoin algorithm, you do see prices generally exploding higher. And then you see a lot of institutional money and institutional interest coming back. I think that the BlackRock and others are trying to get ahead of that curve because, you know, Bitcoin cycles are pretty well defined at this point.
Yeah. Just, I guess you need the SEC to actually approve one of these things to see how it plays out. Eddie, thank you so much for joining us. As always, that is Bloomberg's Eddie Vanderwalt. And for more market analysis, check out MLive Go on your terminal. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Kriti Gupta is in New York. Now, the U.S. Navy is sending specialist deep-sea recovery equipment near the wreck of the Titanic in the latest search effort to find the Titan submersible. Noises picked up in the past 2 days are yet to be identified. We will keep you up to date on this story at a critical juncture for those waiting help. Now, over in Washington, India Prime Minister Narendra Modi and President Biden will hold their bilateral meeting later today. The two leaders are expected to announce a series of defense and commercial deals that includes an agreement between GE and Indian aircraft manufacturer Hindustan. And Kriti, I mean, it's been a busy week for Modi. Elon Musk, of course, was just talking about wanting to ramp up production there, too. That's Jay Powell. We'll get to him in just a moment. But yeah, Kriti, I think this is a really interesting moment for India.
Yeah, it really is. Look, tech and kind of the collaboration there is at the top of the agenda. And this is really important when you talk about not just Tesla, but even Apple diversifying their supply chain away from China. That is a really big deal at a time when Modi is looking for that massive kind of capital investment and really building on his infrastructure platform.
Right, and as the U.S. goes on its, course of de-risking, not just from a corporate side, but from a government side, this is, something Biden has been talking about. All right, Kriti, I teased to this earlier in the show, and here's what caught my eye. Honestly, was the most important thing about Chair Powell's testimony on Capitol Hill yesterday. Take a listen.
But was excited to see that from public reporting that you were at the most recent Dead & Company show. I've been to this version with John Mayer and enjoyed it, but we weren't here. How was the show? Did you like it?
Oh, it was terrific. What can I say? So it was great. I've been a Grateful Dead fan for 50 years, so.
Okay, Kriti, I love this story because, of course, the background is there's that tweet going around of someone who looked suspiciously like Jay Powell at a Grateful Dead concert.
So we still haven't gotten confirmation if he was actually there or not, if that was indeed him in the red shirt. But it is good to know that he's a fan.
He's a fan, and apparently, like everyone in the finance world is. Joe Weisenthal tweeted that literally during that congressional testimony, he was at a Grateful Dead conference in Citi Field. You just know that Jay Powell's heart was breaking, that he had to go to Congress while his fellow Deadheads were enjoying some sweet tunes. I should really listen to them. I honestly know nothing about the Grateful Dead. All right. Credit, coming up, yeah. we're gonna talk about something you and I both know, right? It is, of course, the UK. It is the BOE. Sonali Punhani of Credit Suisse, head of UK economics, is going to be joining us next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Investors keeping an eye on a host of central bank decisions. The Swiss National Bank and Deutsche Bank raised rates as markets anticipate the Bank of England to follow suit with a 13th hike. And day two on Capitol Hill, Chair Powell doubles down on the Fed's expectation for additional hikes in the first day of the hearing. Traders are betting that the bank is going to raise one more time in July. And a glimmer of hope coming from Deutsche Bank. CEO Christian Saving says he expects trading results to improve in the second half of the year. I'm Kriti Gupta in New York with Danny Berger in London. Danny, I feel like central bank palooza is the perfect description for the pre-market action we're seeing this morning.
And you know who we're going to be hiring to play at Central Bank Palooza. It's obviously the Grateful Dead. I swear I'll let this go at some point, still the best part of Powell's testimony. Okay, look, I am so excited about Deutsche Bank. The BOE better show up today because this at the moment is the most fascinating central bank decision. And we're looking at the NOK really gaining off the back of a 50 basis point hike from the Norwegian Central Bank. The expectation had been for 25, but they're having hot core inflation and a tight labor market, among other factors. So here's versus the euro. Euro falls about 1.2% versus the NOK. Now, overall stocks, those are sour this morning for yet another day this week. Every day so far this week, European stocks have declined, except for Ocado, the grocery store service. Some reports from the time that they might get a bid. Those shares are up something like 40%. The Swissy, that is now starting to fall versus the yen. This just shows the perils of trading central banks. Right before the S&B's decision, this thing strengthened pretty significantly with maybe some expectations the S&B might do 50 like Deutsche Bank, but nope, they just go 25. And Kriti, we're still waiting to see whether the BOE surprises us. For now, sterling unchanged versus the dollar.
Yeah, certainly going to have ripple effects on central banking policy stateside. Danny, you have 30 minutes to squeeze in as many Grateful Dead references as you can. And I then think perhaps the statute of limitations comes up. Exactly. So futures, we're looking at 43.99 on the benchmark here. Lower by about 0.2%. Call it a little bit of cautious pessimism, as Danny coined the phrase earlier. You're not seeing a ton of movement here, but really all the action is in the bond market. And it really speaks to the idea of what Danny was just talking about. What kind of precedent does the Bank of England set? Is this a one-off? Is this an isolated case? Or is this something that's going to have ripple effects to the Federal Reserve? When you look at the bond market, the answer is yes, because the idea here is that the 10-year yield might just take its cue from what you see in the gilts market across the Atlantic. 374 at the moment, higher by about 3 basis points. So already seeing the volatility kind of seep in there. And when you see that move in yields, you would expect the FX story to follow. But right now, the Bloomberg Dollar Index kind of stuck between a rock and a hard place. The Norwegian krona on one end, the Swiss franc, and even the pound on the other, kind of pulling it in opposite directions. So net on the surface, it looks like nothing's happening. But underneath the surface, a lot of those FX dynamics, Danny, that you just laid out are going to be crucial. Of course, Bitcoin is also going to be on the top of our radar. Over 30,000, crossing its 200-day moving average. We don't really look at this as a macro asset as of late, but it is worth saying that this is higher by about 0.5% on news about BlackRock and their ETF. We're going to dig into that in a little bit, but really the only asset that's in the green, Danny, among a sea of red.
We need something to keep us positive. Well, let's look forward to the Bank of England rate decision. It comes up in just over an hour, and the expectation is for another hike, but the size of that hike will certainly be the key focus as inflation in the UK continues to remain sticky. For more, we're joined by the head of UK economics at Credit Suisse. It is Sonali Punhani. Sonali, so great to see you.
Lovely to be here.
It's never a boring moment when you join us because it's always around a BOE rate decision. So what do you think? Are they just going to go 25 today? Could they surprise?
I think they're going to go 25. The base case is that. I mean, obviously, what matters is not just the decision, but also the vote structure, the guidance, what they say for future rate hikes. And I think the reason they might do 25 today is because, they haven't given us any prior guidance in the past that they're going to step up the pace of hiking. And I feel like, just without any guidance, stepping up the pace of hiking could create more financial volatility, especially at a time when the markets are already pricing in an extremely high terminal rate. And I think the problem is that, the BOE still believes that, a large part of the tightening is still to feed through to the economy. And as a result, I think that can make them a little more cautious than what the markets are expecting them to do.
You make a really good point about the fragility of this UK market. Now, you talk about how the vote split might come up. What are you looking for there to give you hints of what the BOE does after today's decision?
Yeah, I think there are two key points, right? One is the vote split, and I think there could be one or two members voting for a 50 basis points hike. So even though the majority votes for 25, we could have one or two members, and that could give a signal of future hikes decisions by the Bank of England. The second is what they do with the guidance. I mean, they did drop the word forceful, respond forcefully, which meant 50 basis points hike, quote unquote, in the last few meetings. But it could be that this one, in this meeting, they could reintroduce that forceful guidance, which basically means that they're keeping the door open for 50 basis points. And then I think everything is data dependent. We have one more inflation and labor market report before the August meeting. So if that surprises to the upside again, then the case for doing a 50 in August would rise. And at the same time, August is also a meeting, where they have their inflation forecast, where there's a press conference, so they can explain the decision better in an August MPR month than today, where you just get the minutes. And if they do a 50, I think in terms of communication, it might not go that well.
Well, Sonali, you did mention that this is at the end of the day based on the data that we are going to get in terms of opening the door to 50. What would that look like? What would it take to get there?
Yeah, I mean, we've been seeing in the last few months that we've seen core inflation continue to surprise to the upside and also wage growth surprising to the upside. So they're both close to 7%. And I think it's that upward trend. If that continues, then the Bank of England would be surprised to the upside. In the previous meetings, they have said that, they expect the labor market to slow. They expect the wage growth numbers to slow. And so far, we are not seeing evidence of that. But if that continues even over the summer and we don't end up seeing a drop in core inflation or a drop in wage growth, then the Bank of England, I think, would need to move to more aggressive action. And then I think 50 gets back on the table for August.
So Sonali, that's the short-term picture. Let's talk about the long-term here. I think we had a chart earlier this week that said the last time we saw inflation this high, the Bank of England was at a 15% kind of terminal rate there. Talk to us a little bit about the way that UK inflation is structured here. John Author's pointing out overnight that if you look at the case of the 70s and the 90s, the UK inflation story has been significantly stronger than its European peers. Explain to our international audience why that is.
Yeah, I mean, I think at least in this moment, there is a bit of a structural issue in the UK economy that potentially is driving inflation higher and is making inflation slower to come down. I mean, we've had labor shortages in the last few months, or since the pandemic, I would say, which have been quite stark. And, it could be because of, long-term sickness, because of which people have left the labor force. It could be because of Brexit. But there are reasons why the labor force is just structurally less than what it used to be. And I think those labor shortages are the reason why wage growth is being fueled into the economy, and that's feeding into inflation. If you look at the other components of inflation currently, food and energy, those are coming down, and I think the Bank of England would be encouraged by the fact that those elements of inflation are coming down. But the one that's really sticky and that's been the problem has been core inflation, and I would say the labor market and the shortages that we are seeing in the labor market today in the UK maybe distinguishes it from the rest of the developed markets where the labor market is loosening and you're seeing signs of wage growth cooling, whereas in the UK we are not so far.
The popular UK media has certainly gone after Andrew Bailey. One of our producers, Valerie Teitel, and I put together this list of some of the commentary. The Times over the weekend saying Bailey has run out of excuses. The Telegraph saying that this is a battle he can't win. My personal favorite from May, The Sun saying monkeys could run the Bank of England better than its current bosses. I'm sure most people would disagree with that, but does that do anything to put pressure on Andrew Bailey, seeing this kind of commentary?
Yeah, I mean, I think it does. I think, there is an element of the Bank of England being seen as a central bank where the inflation problem is getting more and more entrenched, and that does come to the credibility and does have an impact on the credibility of the Bank of England. Having said that, I mean, they do have to still work on economic models and see, and sort of, go with what they believe and what the right thing to do with the economy is, because obviously the risk is that if they over-tightened and the mortgage and creates a lot of volatility in the mortgage market, then we might be in a sort of a painful recession, which obviously it would also be criticized. So I think it's a hard place for the Bank of England to be, because I think they are, if they do too much, then people who, especially the ones who have mortgages, would be the ones who would be criticizing the Bank of England. And if they don't do too much and let inflation out of control, then the criticism would be on the inflation side. So they're not in an enviable position at all. And it's definitely a very difficult job for them to do.
Yeah, no way to make everyone happy in this scenario. Sonali, thank you so much for joining. As always, that's Sonali Punhani of Credit Suisse. Now, coming up, we're going to look ahead to an exclusive interview with French Finance Minister Bruno Le Maire at the summit for a new financial pact in Paris. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Danny Berger in London. World leaders are gathered in Paris as French President Emmanuel Macron hosts the summit for a new global financing pact. Bloomberg's Francine Lacqua joins us now from the summit. She gets the best assignments, I have to say. Fran, talk to us about this summit. Talk to us about the significance of being there.
Hi, Kriti. It's pretty fun being here. It is a little bit chaotic. You have 30 heads of states in quite confined and small space. The focus, of course, is on keeping the momentum on climate change. Now, this is not an easy task because it basically touches here and there on a lot of the financial institutions. It's the World Bank, it's the IMF, it's public and private partnerships on how they can work together to try and tackle the big issues. This is poverty. This is child poverty. This is climate change. This is, of course, the next pandemic. Now, we're not expecting some kind of huge overhaul. There was at some point talk of Macron wanting to do a new Bretton Woods agreement. This is not going to happen. What will probably happen is things here and there, maybe a couple of $100 billion of money transferred, but it's really to try and keep momentum, keeping the dialogue also ahead of COP28, and making sure that world leaders that are also not here understand that it's really finance. It's the way we finance projects and give money to infrastructure projects that could really be a catalyst for some of these huge issues we need to tackle.
Well, the conversation isn't just about clean energy there, Francine. It's about the old dirty stuff, too. I know you spoke with Fatih Birol, the IEA executive director. What were your takeaways from that conversation?
Yeah, so we had a good conversation, Danny, about world growth. And of course, he says when it comes to the price of oil, that could really make or break a nation. So if you don't have the infrastructure, it's almost like catch-22, right? If you don't have infrastructure for clean technology and green, then you go back to the fossil fuel unless it's so expensive that it's better for you to do renewable. Now, the easiest way of dealing with this is also transfer money from the rich nations to the poorer nations, something that we have heard pledged, but no real money has come through. Now, Fatih Birol was extremely interesting when speaking about the perspectives of China, the fact that they had not put all of this stimulus in place and the dynamics that means for supply and demand to China. What we could see, remember, there's also the Chinese premier here. We could see the shift this afternoon talk about debt relief, one of the most important and maybe concrete actions that could be taken.
Okay, Francine, thank you so much. That is Bloomberg's Francine Lacqua in Paris. And don't miss, coming up shortly, she's going to have an exclusive interview with the French Finance Minister, Bruno Le Maire. Again, that'll be in the next hour. Kriti.
Well, as we watch for developments out of Europe, we're also watching for developments out of Washington as well. President Biden due to host Indian Prime Minister Narendra Modi today, and a lot on the agenda. Let's bring in Bloomberg's Roz Matheson for a little bit more. Roz, the timing of this is crucial as a lot of corporate kind of tech companies and others diversify away from China. But that's not all that's on the agenda. Walk us through what these two leaders might talk about.
Well, it's very interesting because, of course, he's only the third leader who'll get a state dinner under the Biden administration. And, of course, he's addressed Congress before. This will be his second time addressing Congress, just showing the importance of that relationship. And as you say, there'll be a lot of talk about deals in the tech space, the Micron 1 billion chip plant in India, Elon Musk perhaps investing in India. But it's also about boosting defense ties and doing deals in that space. And that's about drawing India away from China and Russia, because it's got very strong trade relationships in the defense space with Russia and China, about bringing them further into the tent with US companies and defense contractors. So that's going to be very much on the agenda. And also there might be a bit of a nudge from the US again to Narendra Modi, because India has walked a fine line on Russia's war in Ukraine, has not overtly condemned Russia, continued to do business with Russia in the energy space and the defense space. So perhaps a bit more encouragement for India to take a stronger line there.
I was going to say, if Modi is hoping to come and promote India as a friend-shoring destination for the U.S., how much of that is already being done? How far away are the two countries from having that, again, friend-shoring type relationship?
Well, they're definitely moving closer. You can see a lot of opportunity for US companies very much in the India market. For starters, giving demographics, of course, a young nation demographically, a lot of opportunity there. But also, you can see efforts to say to India, we need to reshore your supply chains, really. We're open to doing more investment in the US, equally in India. So you can see some progress around things like visa entry for Indians working in the US as well. So it's all part of this idea of binding the US and Indian economies closer together, and certainly diversifying away from China and Russia.
Right. Okay, Roz, thank you so much for that. That is Bloomberg's Roz Matheson. All right, from geopolitics to banks, Deutsche Bank CEO Christian Sewing says he expects trading results to improve in the second half. He sat down with Bloomberg's Guy Johnson.
We have a very strong corporate bank, a very nice developing private bank, and therefore we can confirm our 28 to 29 billion of revenues for this year. We see the momentum. We see a Q2, to be honest, Q2 2023 from a revenue point of view, which is higher than Q2 2022. So overall, I would say this bank is faring well. The strategy is paying off. With regard to the investment bank, we always said that we had a record year. We had an extraordinary strong year in the FIC business in 2022. I still think that actually in Q1 and Q2 we have done well, but the overall market is a bit weaker than in the record year of 2022. But I do believe with some uncertainties, for instance, the debt ceiling issue going away in the US, then with the still complex situation which is in front of us, I do believe that in Q3 and Q4 there is momentum in the business on the FIC side. But for us as a strategy of Deutsche Bank, it is important that we further balance out the investment bank overall. We have a very strong FIC business. We have a very strong DCM business. What we really wanted to achieve is that also the O&A business is further strengthened. And hence, we have put a lot of investments into that.
So just to wrap this part of the conversation up, it's going to be an operating environment for the FIC business that is likely to be less good than last year. Q2 may or may not be a blip. You still see uncertainty in the second half of the year, which could provide opportunity. So on balance, the numbers are likely to be slightly better than the 15 to 20% that James guided to.
That's what I would say for the coming months and weeks. Again, Q2 was also a particular quarter, given the situation also which we had in the US. We can already see also now in June, on the most recent days, that there is momentum in the business. So I'm overall actually quite comfortable also with the FIC business. And again, Q2 was a particular quarter. I would say that the FIC business in Q3 and Q4, I think there was a slight recovery.
Deutsche Bank CEO Christian Sewing there, speaking exclusively to Bloomberg's Guy Johnson. seeing things improving in the second half of this year. More volatility come, I guess. Now, coming up, speaking of volatility, the market moving events you need to look out for today. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Kriti Gupta is in New York. Now let's take a look at what's ahead today. We're going to get the Bank of England's rate decision. That will be at 7 a.m. Eastern time. Were they surprised with the jumbo hike after that hot CPI reading this week? Then it's another round of U.S. jobless claims and existing home sales at 8:30. Will that be another surprise for jobless claims to the upside? Plus, Chair Powell's testimony continues in the Senate at 10 a.m. And then finally, what we're just speaking with Roz Matheson about, President Biden and Prime Minister Modi will be delivering their post-meeting remarks at 12:45. Kriti.
Yeah, and that brings me to some of the major tech names that you should be watching in the pre-market. We talked about, Elon Musk meeting Narendra Modi and some of the other kind of heavyweight tech companies talking about that big investment. But at the top of my mind this morning in the tech universe is the Amazon story. Yesterday, FTC suing Amazon for making it difficult to cancel Prime membership. We know that Lena Khan, one of the heads, or the head, of the FTC, is really going hard on some of those tech names. Danny, Amazon shares down about 0.3% off that.
One of the more interesting things about this story, if you read the Bloomberg reporting, that apparently Amazon internally knew that the process was so lengthy that they called trying to cancel Prime the Iliad, of course, referring to Homer's epic and lengthy poem.
always a pop culture reference with you, if you can call Homer's Iliad a pop culture reference.
It's old school. Is it pop?
It's culture for sure. Let's go to perhaps the other part of the tech universe. If you can call Bitcoin tech or commodities or even currencies, that's where I want to go, especially when it comes to some of the major players there. Seeing a little bit of a mixed picture after headlines that pushed Bitcoin higher to above 30,000, surged by some of that ETF optimism around from BlackRock, So Coinbase, the exchange, down about 0.2%. But then you have the miners that have way more exposure to the cryptocurrency space naturally. So Riot Platform, for example, and Marathon Digital Holdings, both up about, let's call it 0.2%, Danny.
Yeah, I mean, we've been waiting for a Bitcoin ETF for so long. It's kind of not clear to me as if we have this BlackRock ETF giant, rather, like BlackRock entering the market. Does everyone assume, okay, maybe they know something that other people don't know? Or perhaps they think just now is a better time. Some of the volatility has calmed down, and it's certainly done good things, as you point out, to the price of Bitcoin itself.
Yeah, and it's kind of crucial when it comes to just how much appetite there's going to get, because there's one thing to launch an ETF, as you and I both know. It's another thing to actually see the flows to kind of keep it in business. So we'll see how well that's received given the regulatory scrutiny around the world there.
Yeah, I mean, it is if we were back a few months ago and we're just talking FTX, I don't think we would have said, okay, BlackRock is probably going to apply for an ETF. So a lot has changed, and Bitcoin, it survived it all, past $30,000. All right, that is it for Early Edition. Surveillance, light, surveillance normal. It is ahead with the BOE rate decision, if I can find my words, due at 7 a.m. Eastern, and an exclusive interview with the French Finance Minister, Bruno Le Maire. All ahead. This is Bloomberg.